All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Look, I wanted to do a little quick video on the U.S. labor data, which came out just recently, so everything is still fresh. I don't know if something will change, but certainly the data is still fresh. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Basically, yeah, we're seeing some very nice action in the market, which I'll jump in a bit. Also, before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also this week on Thursday, I will be running a webinar, my last webinar, Zoom webinar, this year. Basically, it's kind of wrapping up the year and talking about the things that we have learned so far. I mean, because during the Zoom webinars, I kind of focus more on educational side, and we're going to pick up on all that. But of course, we will apply again everything on real live market action in with entering trades on our demo account, of course, because look, practice makes perfect, and that's what we are focusing on. So, of course, like I said, join in. I think that will be a good session. It will be a good session. You can ask questions, feel free, and then we'll go from there. So, ladies and gentlemen, yes, let's have a look at what's happening with the data. So, today we got the US job numbers, and it was actually also a bunch of other data that we got together with that, because that's the kind of last NFP reading for this year. So I don't know if I want to go through everything straight away, but let's say, first of all, ADP. This is something new that we're getting now, and actually, in my opinion, this is wonderful. I mean, every week we're getting an employment change number weekly, and I think that kind of helps us out a little bit, at least to gauge what's happening. ADP normally delivers a monthly together with the NFP or together with the Bureau of Labor and Statistics, but I think that they decided to, release this weekly data as well. Look, I think they're doing quite well because we need an alternative to the Bureau of Labor and Statistics, and this government shutdown provided us with exactly that reasoning why we need an alternative as well. So ADP was always there. It's just that now the market, it kind of stepped up a little bit. So it's great to see that. To be honest, I'm always for it. What I'm seeing right now is that they delivered a employment change number, an increase from the previous 2.75K to 16.25K, which is okay, great, but still the market reacted more to the good old fashioned NFP. Okay, look, average hourly earnings. I mean, we got some data basically for October and November. And what I saw was that average hourly earnings for October, we saw the actual number increasing. November, we saw a bit of a decline. Now, look, I think the more important ones, of course, were the NFPs themselves. So the November number came out fantastic. It was great. It was 64K increase from the forecasted 50K, because the forecast actually kind of appeared a little bit closer to the time of the release. And it was above forecast, and it's also above the previous number of 25K. But what they did, they also released the October number, and that was a bit of a disappointment because look, the previous number was 108K. The October number, boom, to the downside, minus 105K. I do get it. I do understand that it will come with a little caveat that because the government was in shutdown, everybody kind of lost their jobs in a way. So mostly it's the government workers, and that's what the rhetoric. That's why they're trying to kind of how they're trying to spin all that, because they're trying to kind of provide a little bit of positivity and all that, because 105K negative, that's a bad number. I get it. It's a little bit a different timing, different kind of approach we should be taking. But in general, a number is a number, okay? And it still kind of gives us this indication that, well, not everything is, great, and we understand that. So look, long story short, the November number kind of, jumped back into 64K. So the previous number was become now becomes the minus 105K. I don't think that I don't think that TradingView actually updated this. Let me just show you what I'm talking about here. This is what I'm talking about. See, 105 minus 105K. If I click on this one, I'm really curious if this is going to actually um, yeah, I want to switch to monthly. So if this is going to get updated, yeah, actually, fantastic. Thank you very much, TradingView. Wonderful, wonderful. So that's what I'm talking about. So fell below zero, and basically it is recorded now. So it is recorded, and now we see that we have dropped into such a negative territory, and we have not been at such negativity since what? Since 2020 December. Um, yeah, that's a bummer in a way, and of course we understand that when the market opens up later on today, we might see some negativity coming through, unless the market is gonna pick up on this data, thinking that, oh, you know what, I think we should be pricing in now more rate cuts because the Fed will come out in order to support the economy. But as I kept on saying before in my webinars, my markets talk webinars, which you can always join in live. It's Monday, Wednesday, and Friday. Well, this year basically we're left with tomorrow's, Fridays, and on the 29th on the morning. So I'll still have 3 sessions to go through on Markets Talk. But what I kept on saying was that, look, the probability right now, where's that probability? So the probability right now is to keep the rate unchanged going into January. So we're not expecting any kind of rate cut or anything like that. This is only expected closer to the 29th of April, where we're expecting a cut basically from by the Federal Reserve. So we'll see how that plays out. Basically, that's kind of the last meeting that Jerome Powell will hold, and I think he's going to just, here you go. But certainly, one thing also to consider here, what happened was that unemployment rate actually increased 4.6. Now that's a little bit of a disappointment, to be honest, but we do understand that we're going there. I think we'll end up, next year. I think we should end up closer to 5% in the U.S. So that will be a little bit of a disappointment. And what I was trying to say in the beginning, that if you're thinking that the Fed should now kind of increase their rate cuts, going into next year. In my opinion, the Fed is kind of worried a little bit. Will this benefit actually the consumer? Will the companies be recruiting more people? Because yes, that they might take out more loans. The financing will become a little bit cheaper. Congratulations, great, but that's kind of, this money will go towards AI, towards this whole AI, in order to substitute the person. So long story short, again, I really doubt that the lowering rates at this point kind of will, more lowering rates will help the jobs market, the labor market, because again, exactly what I just said, it's a concern that this money might not actually, go towards creating more jobs, and on the contrary, developing AI in order to substitute jobs. So and that's why, going for more than 2 cuts in a year, unless really the stock market really starts collapsing or something like that, and to kind of just maybe to boost the morale, you would probably you would then throw out more rate cuts. But or unless you get a very favorable new Federal Reserve person there, and we know that currently, favorable to the White House. I'm need to correct that myself. Favorable to the White House, where we are, where they are actually hoping to see more rate cuts. Anyway, long story short, for now, like I said, for now the question is, how we're gonna go further with the labor market in terms of, are we gonna see more drops below zero this year? Most likely not, but what a way to end up and end the year, right? So going into next year, we'll keep an eye on that, and in January we'll get the December figure, so we'll see how that plays out. So hopefully from New Year, everything will be a little bit more stable. But until the next government shutdown. Anyway, going back into the market, look, I have Bitcoin here on my chart, and you know what? Let's do one thing. Let's remove all the drawings and let's have a quick look. So basically, when the news dropped, we started seeing a stronger dollar, basically. So the dollar kind of benefit from that, maybe because initially the reaction was to the 64K. That that's a better number. You don't need more rate cuts here. But the XY right now here, yes, it's still on the lower side. Don't get me wrong. I have this Fibonacci retracement, which is drawn from the lowest point of September to the highest point of November, and we're seeing that we see that we dropped below the 50%. We're aiming kind of for the 61.8 here on the Fibonacci. It's doable. Don't get me wrong. I think it is a possibility here, unless it starts pushing back above this 50%. If it does that, I will consider a move to the upside. For now, I am remaining on the cautious side here. I will stick to the downside a little bit, to be honest, unless, like I said, unless I see a push back above the 98.30 zone, which is around my 50% on the Fibonacci retracement, which is drawn this way. So yeah, coming back to the Bitcoin situation, look, Bitcoin yesterday sold off like crazy, and dropping from 90K all the way briefly towards the closer to the 85K. Today we're seeing a little bit of retracement, which is fine. It's okay, but can this be sustained? Can we actually drift back up? We did already a good retracement here on Bitcoin. We kind of went to this little area of resistance, which is roughly around the 87,765. We didn't reach the 88,100 kind of 30 zone, which I have here, but this one we did reach the 80, or actually almost did I yeah yeah we did reach that almost. So good hit, and there we go. We're seeing a little bit of a retracement back down. Look, I will get a little bit more bearish, to be honest, today if we start falling below this little hurdle, 86,450 zone. And if we do that, then well, I think that we could see further declines, and with the strengthening of the U.S. dollar. Again, it's subject to strengthening of the U.S. dollar. We could see further declines here, unless the U.S. dollar we will throw out totally out of the equation, and we'll see basically the outflows of funds from Bitcoin funds, and like we saw yesterday, and there we go. Congratulations to all the short sellers. We saw a nice drop lower. Look, in general, for me to get very bearish on Bitcoin, I would like to see a drop below November low, which is around the 80,500 kind of 60 zone here. That's the preference, and then well, it's kind of opening the door to some further declines here, ladies and gentlemen. I think that this is where we could start getting a little bit uncomfortable with the upside. But yeah, if we do drop below this 83,000 83,868 zone ish. That's the low of the current lowest point of November. Oh, sorry, November, December. If we do drop below that, we create a new low for December. Then we're aiming for the lowest point of November, and if that gets cleared, ooh, now that's a beautiful one where we could target the current lowest point of this year, which is around the 74,400 kind of 50 zone ish. But again, let's go slowly on this. Let's be careful, not rush into things, and we'll go from there. Bitcoin Cash, yes, I like this one, but this is I'm looking at Bitcoin and Bitcoin Cash, because this one is a little bit on the stronger side, and it's holding up better than Bitcoin. So if you're looking for some value, sometimes actually Bitcoin is good, but Bitcoin Cash to me, it's like actually another interesting one. But let's jump into commodities actually as well. Look at this gold. Gold is enjoying the slightly weaker dollar. There we go. We did drift lower. We did correct to the downside towards this breakout point, which I pointed out in my webinars previously. And we did have a nice correction back down. We tested it and rebounded. So the question is, are we setting sail for the all-time high? Well, I want to say yes. I want to say yes, but I'm being very careful, okay? Because in general, look, this eventually has to come down, right? I mean, this eventually has to come down, and this is a very strong push higher. The monthly just kind of continues to explode here. Similar story with silver. Look at this. I mean, I talked about silver previously. With silver, I'm kind of targeting still maybe the 60, excuse me, 66.10 zone here. If the dollar continues to weaken, then yes, this could actually travel further north. But in general, don't forget about this. 1980, we had something similar. 2011, we had something similar. Do we crash? Yes, we do. I'm not really. I do believe in precious metals. Don't get me wrong. I think that they're a good store of value. However, the market dictates, so if it's way too expensive for me to buy, then I'll probably, if I'm late to the game, let's say, and I do like precious metals, is it actually for me worth buying at such levels, such highs? Yes, if I'm maybe prepared to hold it for another 20 years or 40 years or something, then yes, great. I would say, go because maybe it'll go to silver will go to 100. However, in the shorter run, um, I do believe in a little bit of a correction here at some point. When is that going to happen? I don't know. Unfortunately, I don't have a crystal ball, but certainly this cannot drag like this. I mean, it's just unlogical to purchase here. And another thing, look, if the stock market starts collapsing, I think that the precious metals will also drift lower. And if we see problems with the labor market, look, you need more funds then, to governments will need more funds to support the labor market, right? I mean, and for that, you need money. And, if you're not getting, let's say, investments, then you need to find that money from somewhere. And, thank God you purchased a lot of gold and silver before, right? Before it rallied, right? So now you can actually offload some of it in order to get some money, in order to pay your people, and this way, you can, instead of like switching on the printing machine. So, long story short, this is kind of like I said, this is one of those options, and that's why people say that, oh, you should start buying when the stock market start buying commodities like silver and gold when the stock market starts reversing back down. I think you're a little bit too late to the game then, So I think it was already a good moment to purchase. Maybe you can capture a little bit of a more up move here. Maybe gold will go to that 5,000, the promised land, 5,000, but I don't know if it's gonna be right now or actually will it be a little bit later, or maybe 5,000 is already overstretching it a little bit. Again, it's a debatable question. I will start considering maybe 5,000 if we do clear the current all-time high, but at the moment we're still struggling with that. Ladies and gentlemen, very quickly on what's happening with USD CAD here. I like this pair, I really do, and we had some strength initially in the US dollar, but now we're seeing some weakness in the US dollar. So USD CAD is dropping, but we're actually approaching a very important area of support here near the 1,300, sorry, 1.3722 zone. I'm going to keep an eye on it, and this is one of my favorite patterns actually. When we have a strong decline and then a gradual decline, it kind of tends to reverse back down, back up. What's happening? So yeah, back up. So keep an eye on this. Like I said, we're approaching a key area of support. Let's see if we can rebound from here somewhere, at least for a little bit. I'm not saying very drastically. Actually, I need to probably calm down my arrow here. 1.38 could be a good option, but again, let's not rush into conclusions. Right? Let's keep an eye on this area and let's see what's going to happen next. The U.S. indices are going to open up in a moment, but let's see what kind of reaction we're getting in the euro indices. So DAX Docs, DAX, DAX is drifting a little bit back down, so it's really struggling with this hurdle here, this 24,000 kind of 400 zone, and roughly. And I said to you before, in order for me to go further north, I need a clearance of that area. And if I can get that, great, wonderful. More, buyers could join in. Yesterday we saw indices correcting lower. Looking at the cash indices right now, what am I seeing here right now? What am I seeing? Okay, Nasdaq, for example. Nasdaq is trying to stay afloat. It's trying to stay afloat above that 25,000 mark. Yesterday, it drifted closer to it, but today, yes, we had a brief visit below that 25,000. So let's see if today we can actually stay above that 25,000 mark. If we can stay above that, then okay, maybe we're not really done with the upside, but certainly, be careful, be cautious. Dow in general has already created a new all-time high, but what I said to you previously, that whenever we get a clearance of the previous all-time high, and then but we fail to close above that previous all-time high, in that day, then yeah, it kind of seems a little bit of a bearish indication. So, ladies and gentlemen, that is it. That is a wrap. Thank you very much for watching, listening. I just wanted to quickly run through the market with you to see what's happening, after the U.S. Jobs data. But hopefully you enjoyed the session. Don't forget to like and subscribe. As always, thank you very much for your participation in general, for watching this video. Thank you very much. And as always, I'll see you later. Don't forget to like and subscribe. I already said that. But most importantly, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you in my next little video update. Bye for now.